Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. I'm Andrew Hall. Joining me today, Ben Nye. Ben, how are you?
Doing well, thank you.
Good. This is going to be a short, sweet little update on a company that we actually own. I think most of our analysts are pretty split on it, and I think this will be a good representation. And that company is Gilead, ticker G-I-L-D. When you look at Gilead from kind of a macro perspective, there's a lot that maybe looks attractive, but could also be perceived as something of a value trap. They've got a lot of cash on hand. They are refraining from acquisitions that some might view as reckless, but at the same time, it seems like they've been doing an awful lot of relatively meaningless dividend increases, huge share buybacks that are probably not the best use of capital as the stock price continues to deteriorate. Right. In fact, they're not the best use of capital. Ben, looking at earnings, I think the general consensus we would say, just based on both the market reaction as well as the numbers, I would say it was an okay quarter. Wasn't awful. The past couple quarters, we've seen Gilead trade off quite a bit after earnings. Yeah. Right now, it's down maybe 2.5% since reporting yesterday. So not a huge run. They reiterated their full-year guidance, which is not necessarily a shock. But with Gilead, what are kind of the storylines and the concerns you have? Because you're a little bit more bearish on it than I am.
Yeah, I mean, I would echo your point that I don't think this. I mean, ostensibly, this quarter wasn't as bad as last quarter, which couldn't have been much worse. That said, it's just kind of more of the same for Gilead. I think we are getting closer almost to that apathy point where people have just given up, stopped caring, and all the sellers and shorts have washed out, and people who are going to hold it just kind of have it in their portfolio and say, it's going to do what it's going to do. That said, I think that Gilead continues to have a melting ice cube in the form of Harvoni. Sales have just continued to fall rather precipitously. I think Epclusa is a solid new drug, but I think that it could have a relatively short life cycle because the competition, and when you're making billions of dollars a year on a drug, you're just going to get alternatives that come in. Not generics probably, but you're going to get something that has a similar impact. I think that a lot of pharmaceutical companies are able to do that pretty well. So you have that. But that said, with Gilead, we don't have a situation, in my opinion, where there's a bankruptcy risk. There are other pharmaceutical companies who have raised prices dramatically, and when that happens and they're making 99% gross margin, they're only going to make 50% gross margin, they lose these huge interest costs, that actually puts them at risk of bankruptcy. That's not the case with Gilead. I think even if Harvoni goes away, Sovaldi goes away, Epclusa deteriorates, I think you're still talking about earnings power in the $3.30 to $4 range, which at this valuation is not unreasonable. I think it's trading at $68, $67. Yep. So that's kind of the way it shakes out for me, but it doesn't necessarily make it an attractive stock for me to buy here.
And that's, I think, maybe the frustration for a relatively long-term shareholder of Gilead is you can certainly find companies that look worse.
Yep.
But I think you'd be hard-pressed, and I don't say this too facetiously, I think you'd be hard-pressed to find a company whose management have seemingly done less in terms of trying to return true value to shareholders. I mean, you have this massive buyback plan. The stock, you don't have to go that far back in time when a lot of people thought this could be $120 stock. Yeah. And it's traded down, while seemingly doing nothing across the board. From your perspective, what's the key for management? Is it to just stop the buybacks? Is it to acquire something? Everybody always talks about what Gilead could do with their cash on hand and all that kind of stuff. What's the path forward if Gilead kind of wants to get out of this, or is it just a war of attrition at this point?
I think management, I agree, management hasn't done anything to really create value. And I would say the board has actively done stuff to destroy value, i.e. buying stock back at $120 a share before the stock goes down to $67 a share. So that's point number one. Point number two is, you asked, how does Gilead get out of this cycle? Well, first of all, they need to actually just get some revenue growth going organically. And if they can't do that, if their R&D department is just too weak to do that, to make up for the loss of the legacy drugs, then they need to go out and buy something, or have a managed decline situation. And you can have a legitimate managed decline situation, which is kind of like we've talked about in the past, royalty trusts, which have a deteriorating asset, but it's managed and the stock price goes down, but it still reaps benefits over time for the investors, because people know what they're getting, and eventually it goes to zero, but you've been paid your money back with interest over that time. I don't see Gilead's management doing that. So in light of that, they have to go out and buy something, and they have to go out and get organic revenue growth. I don't see much value in biotech at the moment, and I have serious doubts about the organic development side. As a result, I have serious doubts about the company.
So, kind of a company to keep an eye on to see if they do anything. I mean, we joke about the company a lot in terms of earnings and things like that. I think that, for lack of a better term, at some point we're holding on the shares because we hate to sell them here, which is a bit of a battle if we're being real honest about it. But we're holding on to some shares. We do think that they could return. I'm optimistic that because the stock didn't take quite as big of a hit as it typically does after earnings, that maybe we're closer to a trough. Maybe we're going to kind of spring out of this. Maybe we're actually going to get closer to some kind of growth or just some action from management. I think at this point, like, any news would almost be good news.
Yeah.
So kind of something to keep an eye on. But Ben, you got any other thoughts on Gilead?
Yeah, I mean, I guess just to summarize my points is, I'm disappointed with how the company's been managed, but at the same time, I think it's approaching a more reasonable valuation, and certainly I'm apathetic toward the stock. And I think based on the decline today, I mean, it's about exactly what I think both bulls and probably some honest bears would think would happen to the stock this quarter. And I think that characterizes apathy. That's sometimes a good time to buy.
Yeah.
So I have to acknowledge that, but I'm not.
But you're not. Very good, very good. Those are our thoughts, conflicted as they may sound. That's where we're at. Thanks for being here. We'll talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.